What's up, everyone? KianTrades here, and I'm going to show you a quick little recap on how we used Unusual Whales flow on our SPGI trade. So let's get started. So I tweeted earlier that there was a 315 put sweepers for 1118 expiration, and so obviously when you have consecutive orders like this pop up on your screen, it definitely catches your eye. So once I saw this trade, obviously I clicked the expiration, and I saw that there's 221,000 in premium into this trade. Now, when you do see these green candle, this massive green candle, that they're buying it at the ask. So this tells me that this is someone who's buying the contract. They're not selling the premium. And then at the time, this is all the volume going into puts, right? So as you can see, there's 428 put volume to 4 call volume. So I know that they're buying this contract. There's a lot more volume in the puts compared to the calls. So now what do? I don't just enter blindly. I go to my chart. So on Friday, there was a consolidation going on. 323.47 was a resistance and finally broke out. But today was a whole nother story, right? So now it was acting as a support, right? So support by old resistance. Once it broke 323.47, we entered the contract at 360. The spreads were a little bit wide, but lucky enough we were able to get in at a pretty good price. So once it broke 323.47, pushed all the way down to a 322.16 support, another support from Friday. And luckily we were able to get out at the low. And I think we have it. Yes, I think I do. Yeah, so on the small account, we made $180 on 3 contracts. So it's a pretty good trade. And that's how we use Unusual Whales flow for our day trades. Thanks for watching, guys.